What's going on, guys? Brian's here. Welcome to my YouTube channel. Let's review some of the price action that happened on Tuesday, September 24th, 2024. Right here, yesterday, there was a clean trade opportunity on the SPX as it bounced off of the key strike of 5,700. We will take a look at the confluences around this trade opportunity. We'll take a look at how you can prepare for this trade using some of the tools from Quant Trading app. So that's what these levels are that you see on my chart here. They are coming from the Quant Trading app script. We are going to take a look at how we can combine some confluences from gamma exposure. If you don't know what gamma exposure is, link is in the description to my playlist, and more specifically, the video in which I cover how I prep for the week whenever I'm drawing out these levels on my chart. This 568 level was shared in the previous video in which I did at the start of the week. In other words, this level existed before price action got here. We will cover some call options, both a 0 DTE and a 1 DTE option, as well as why would we choose this strike. Right here, I marked off what would be considered an ideal entry, as well as the realistic targets, and then the maximum reward if this trade was held all the way until the high of day. The reason I like to showcase these entries and exits as well as the ideal entries and ideal exits is because this type of information you can carry forth, and the next time you see a similar setup, you can have some sort of expectations regarding what type of profit you can expect to make. My first year of trading options, I used to do this almost every single day after the market closed. I would go back and take a look at the ideal call or ideal put option for that day, and that helped me build expectations around scalping, day trading, which in my opinion is if you're holding the position for longer than 15 to 30 minutes. We will also take a look at some of the notes in the Quant Trading app Discord around this time and how one of the traders in Quant Trading app was able to spot the opportunity for himself. We will take a look at the 0 DTE gamma exposure, what it looked like at that point in time, how to interpret this profile, as well as the Quant Trading app proprietary trade engines, data, and graph. We're going to watch the tape later in this video here, and we can see what the data looked like in real time at that point in time. This is the gamma exposure page within Quant Trading app. This is a snapshot from yesterday here around 11:30 Eastern time, so about an hour after the trade actually started manifesting itself. This page is intended to make it pretty simple, so if you don't understand a lot of the advanced metrics, you can just trade it the way in which you normally would by looking at the candlestick chart and treating these levels as key support and resistance strikes. So let's start now with the recap. The market essentially opens around 7:30 and sells off to 700, so about a 30-point drop. It's always important to be aware of the catalyst for the day. The catalyst was at 10 a.m. Eastern Time was the Consumer Confidence Report. This is the results from the report. This information is free and available to anyone at this website or any type of website that gives any type of economic data. This has just been my preference for as long as I can remember. The results from my understanding was right in alignment with expectations. As we can see right here, it was within consensus. Now, most of us are not economists, so in my opinion, as a day trader, it's not that relevant to really understand the macro implications on these reports. All I needed to know is that it was within consensus. I'm going to take this as, hey, the news is not that bad. So how does that help us as a trader? Well, this right here is 10 a.m. This is right when the results of the report comes out. So as a trader, if the market has sold off into an area of support, at the same time a report comes out and the report is not that bad, our job is then to investigate further information to see if we want to capitalize off of the opportunity in front of us. As we take a look at this chart, what do we see on the chart? Well, we know that this is a key strike at 5,700. And how do we know it's a key strike? Well, let's start with the fact that it is a whole psychological number. 700 is a psychological number, the same way 800 would be, so 5,800, the same way 5,600 would be. Any of these multiples of 100 in the SPX is going to be an important or key strike. That is where information like gamma exposure can help you really see an extra dimension to the market. This is 10 a.m. Eastern time, so this is a fraction of a second before the news hits the wire, and this is 15 minutes later. What do we have here? A massive strike at 5,700. The same way here at 10 a.m. And even if we were to go a little bit earlier, this is 15 minutes after the market opens, we can see the significance of 5,700. Look at how large that strike is in comparison to every other level on this chart, especially 15 minutes after the market opens. The negative gamma strikes cannot compare to how large this strike is. And the same goes for the positive gamma strikes. In quant trading app, we refer to this as P1. P1 just means it is the strike with the highest amount of positive net gamma. We can also see that it is the absolute gamma strike. That's why this is purple right here. And right beneath it, we have the max pain strike. This would be the spot price of the SPX at this point in time. In order for the SPX to sell off and enter this area of negative gamma territory, it has to break past 5,700. The market started up here at 730 and then it sold off 30 points into this strike. At most, it's going to need some type of time to consolidate around this level if it was to continue selling off. So this already creates a level of safety for a day trader, as this is the level you can use to risk off of. Meaning if you are going to buy at 5,700, you can tell yourself, maybe I'll give it 15 points of a stop loss, and maybe I'm going to target 30 points to the upside. That is a 2-to-1 risk to reward ratio. If you are risking 15 points and you're looking to make 30 points, you are essentially looking to make 2 times the amount you are risking. That is how you come up with a plan as a trader. Know the level first and foremost that you want to take your risk off of. Then you calculate how much room are you willing to give the trade regarding your stop loss, and then you calculate how much your profit target is, and you want to have some sort of realistic expectations. Now, how else can we see how significant this strike is of 5,700? This is where also keeping the SPY up when you're analyzing the SPX is important, because we know this is a key strike on the SPY. As addressed in the video that came out right before this one, these levels are analyzed at the start of the week based on the entire week's gamma profile. This is where the positive gamma starts. In other words, the market wants to remain above this strike. It is a natural state for the market to be in a positive gamma territory. Without understanding the advanced implications of that, it means this level is likely to act as a support. More information on how I start the week with these levels is in the link in the description down below. It's how I prep for every single week. This is the levels here shared on the 23rd, which was Monday. You guys can see that's the same level that's right here. It's coming straight from this gamma exposure profile. This is the combination of all expirations for the week. So Monday, Tuesday, Wednesday, Thursday, Friday at the start of the week. And then I'm plotting these key levels on my chart right here. And we can see 568. This is the last strike of high net positive gamma before things transition into negative gamma territory. As price is above it, the expectation is that it's going to act as support. It also happens to be a strike with the second highest absolute gamma. This is the strike with the highest positive gamma, which is 570. Then the next key important strike is 568. Knowing these levels can help prepare you for the entire week, as that analysis from yesterday has already paid in dividends, as it provided 2 trades already for the week. A scalp from 568 to 570 has paid off on Tuesday, and on Monday it also provided a decent scalp opportunity. But let's just say you need more conviction. You want to see more data, just more things to really make you feel comfortable about taking a trade like this. As a quantitative developer, these are the types of questions I'm constantly asking myself. How can I boost my conviction behind the levels I see on my charts, behind the technical analysis and everything I've learned as a day trader? How can I develop tools to make things even simpler for not only myself, but for newer traders? 5,700 is a key strike. Let's take a look at the quant trading app trade engine. This tab right here with the SPX data under the SPX trade engine has all this information. It's calculating it and it's sending this prints to the Discord. Sometimes I like to pull these images at the end of the day and then I put it in a video to make it easy to go back and analyze. So that's what I went ahead and did. And this time, instead of using the standard color, I decided to use the dark mode. So let's take a look at what I like to call the trade engine's tape and play it out. This is the start of the day. So it's saying the time right here, this is 15 minutes, this is 5 minutes, this is now 30 minutes after the market opens. We're now at 10 a.m. Eastern time, and then we see the drop here. So 5 minutes later, the market has dropped down. We know the report has come out, and where does the SPX drop down to? It is now at how many significant strikes? 5,700 is the absolute gamma strike. That's what this dash purple level here is in the background. 5,700 also happens to be the highest positive gamma strike, which we saw when we took a look at the gamma exposure profile. We are now past one expected move from the open. This expected move from the open is coming from the calculations of the options chain. Let's continue to play the tape out and we see our first sign of a bounce. Now, maybe at this point you're still waiting because you're not sure. And I'm a patient trader, so I would rather wait for these 15-minute candles to close most of the time because I'm trying to build up the convictions and I want a clear level to risk off of. Sometime if you're trying to buy something that's in a counter trend, so in other words, if it's selling off and you want to take a bounce back up, the easiest suggestion I can make for you is to wait for the first green candle on the 15-minute time frame to close. In other words, there's no reason to enter this as it's still a red candle. There's no reason to enter this. You know this is an area in which you can act because we took a look at all the confluences already around 5,700. At this point behind this P1 strike here, which is just saying it's the highest positive gamma strike, there's a red bubble behind there also. That is also letting us know that it's also the strike with the highest put volume at this point. So a lot of activity around 5,700. Let's play it out and see what's happening here. We can see that the buyers are present. We can see that they are holding the level. This right here is the key candle. That is a 15-minute doji that formed right on support, and it is green. If this was red, it wouldn't have stopped me from taking the trade because at this point we would have seen how the buyers were very present. They were very aggressive here. As we can see the rounding out of these candles, we can see that the 15-minute candles were not closing at the lows. Look at the characteristics of these candles. If you don't know how to read the tape, or you don't like reading the tape, or level 2 is not something that you're skilled at, this is the simplest way I like to interpret it. I used to be a scalper that used to read level 2 and I used to read the tape. And after a couple of years, I just felt like it was unnecessary for my style of trading. I'd much rather just wait for these candlesticks to close. If I see these long tails and long wicks on these 15-minute candles, that is already a summary of what was happening between the buyers and sellers at that point. 15-minute hammer candles, 15-minute dojis can summarize enough of a story that I don't have to stare at the tape while all this is happening. The trigger in this case, if you're really aggressive, is obviously to buy right on support. If you're a little bit more patient and you're waiting for confirmation, that is one sign of a confirmation. You can use also EMAs, which we may take a look at later in this video, for another possible way to trigger your entries. But for the most part, it's about the characteristics. Look at the nature of these candles relative to the previous ones. Look at how big of a candle this was. Look at how big of a red candle this one was. Look at how large of a red candle this was. But then look at the bottom of this one. That means at one point, price sold all the way off to here, and then buyers came in and had the candle close here. Then the next 15-minute candle opened. Sellers tried to drive price down, but then buyers became aggressive and started buying on the ask, and they drove price back up here. Then at this point, buyers and sellers were fighting. It was pretty much an even battle, and sellers again tried to drive price lower, but bulls were aggressive enough to buy on the ask and drive price back up, and it ended up closing right around where it opened. This is usually an early sign or some sort of a warning that a trend is going to change. And that's what we see right here on the trade engine. The important thing is, where is this taking place? It is taking place already in an area and a key level that we are aware of. If it was happening in no man's land and there were no key levels around, then you ignore this information. You wait to see the characteristics of candlesticks at your key strikes. Now, 720 is the power strike. This is a proprietary level 2 quant trading app. It is the strike that QTA is trying to calculate where it thinks the markets will be during power hour within a 5 to 10 point range. In other words, at this point in time, what quant trading app is saying is, hey, it thinks the market is going to be between 7:10 and 7:30 during power hour. Now, earlier in the day, this level can be used as a target if there's some sort of confluence around it or if it makes sense. In this case here, as the market is at support, if the trade engine is saying that it thinks that the SPX is going to be at 7:20 during power hour, then yes, you can use that as an extra reason to maybe take a trade. You can use this as a target if you run butterflies. You can use it as the call that maybe you would like to buy. It's just giving you some sort of an idea or a reference. If the absolute gamma strike was also at 720, that's what I use as my largest conviction to run 0DTE butterflies. I would just choose the targets that the power strike is saying whenever absolute gamma strike lines up with it, and it makes sense. And again, the reason I'm saying it makes sense is because we are currently at support. All the aforementioned reasons in this video, why would a trader be looking up? It's because of all the reasons we just addressed. For traders that like to run credit spreads, then obviously you can sell a put credit spread beneath this key strike here. with the expectation that the market will not close below all of this confluence right here, this cluster of all this information. We can just play out the tape now and let's see what happens. We know the market did end up closing around here. We ended up bouncing. So this essentially can be seen as the profit target. So as this trade engine or this algorithm is programmed to trade, this is what it would use as its exits. This is the trigger. It ended up buying at support. It sells as it hits the power strike. It also sold as it hit the expected move. That's what this green territory is here and this red territory is here. It's saying this is the expected move for this 15-minute time frame to the upside and to the downside. So it just did what it was supposed to do within this 15-minute time frame. It would close the trade, and that's the scalp. So when we take a look at the options P&L in a few minutes, we will use this as the exit. But let's continue to play this along here. Not going to narrate every single thing. I've done quite a few videos on this. There is the daily recap playlist in which I've covered the quant trading app trade engine multiple times. I've shown multiple examples. Now we can see price is obviously chopping around the power strike, which has moved up to 730. The absolute gamma strike was a little bit more volatile as it was bouncing around, as there were a lot of strikes with absolute gamma. We discussed this in the quant trading app Discord, but for the most part, when you see this type of data in alignments, the absolute gamma is here, the power strike is here. We can see the expected move really shrinking early in the day. By early in the day, this is 2 p.m., so 2 hours before the market closed, we can see things are pretty flat. The expectation is going to be that the market is not going to move much towards the end of the day. So this is where running something like a 30-point wide iron condor or even a 40-point wide iron condor is going to have high probability. Using the power strike as the middle of your iron condor or iron butterfly in this case is usually how I approach using this type of data. As mentioned earlier in the video, this is the gamma exposure tab. So this is the simple day trading gamma exposure tab within quant trading app. It's the most up-to-date information once you refresh this page. So on every refresh, you're going to get a brand new calculation. And this is also drawing the levels on the chart. So it's making it pretty simple. As you see, the market has sold off. If you don't understand what all the advanced metrics are, you just take a look at this as support and resistance level. The P1 strike is telling us how much gamma exposure there was. You can see how much open interest there is at this level, how much volume there is at this level. You can see that the absolute gamma strike is here. All these things kind of combined. So it's just another way of interpreting the same information. The trade engine was designed to give traders one place to just have to look at. But if this is overwhelming, this is where you start out. This is how I started out after building this page. It was just this one tool here, which was just showing the gamma exposure. But as you get more advanced, sometimes you want to see some more advanced metrics. And instead of having to click around a million different places, decided to just put as much information onto one chart that still had the candlesticks, because as a technical analysis trader, as a trader that spends most of their time looking at charts, I need to see the candlesticks in relation to the data. It drives me crazy if I just look at spreadsheets all day long or if I just look at data. I like to see the candlesticks. This is the gamma exposure here for today. So just before I started recording this video, we can turn on the absolute GEX. As the market opens, this information is going to be updated, but we can use this to establish some key levels for today. I just wanted to show you guys how it works on YouTube here. If you've never seen this type of information, I'm going to refresh the page. And we get a little bit of a breakdown of the top absolute gamma strikes. Again, this is the same levels here. The market is not opened yet, so any of this information based on pre-market for the SPX is not going to be accurate, as it needs a couple seconds after the market opens to get the new information. And then once the market opens, the information is going to be real time or live once you refresh the page. So let's conclude this video now by looking at the fun stuff, which would be the 0DTE 720 call. At this point, it should not be a surprise. Why would we take a look at the 720 call? It was the strike at this point. As we know, it was the power strike. It was also right where the expected move mesh has kind of dropped. So we can see right here, this is essentially saying, hey, if you're expecting a scalp up, this looks good up to 720. Past 720 right now, no one knows, but at least for this point in time, if we were to wait for that first green 15-minute candle close, so right here between here and here, if you were deciding to grab the call anywhere in between here, it's about a 10 to 15 point scalp. So this is our entry at this point, and this is the exit here. So a pretty quick scalp for 60%, a little over $200 per contract. As you guys notice, I'm not pointing out the exact low for the contract, as that is not realistic. Most traders will get filled anywhere within this range here. And then this is if a lotto or a runner was held, which is an amazing return of 300%. Over $1,100 from the initial entry at the lows here. Look at all the volume that came into this option when price was around 5,700. That's a good sign also. This is an out the money call. Why is it receiving so much volume as the market is struggling to go lower? If this option looks a little rich for you, this is where there's the out the money options also. This is a 1 DTE 5740 call. So to keep the price down, we go a little further out the money, but we're going 1 DTE to make it a little bit safer so we don't have as much of a harsh theta decay. Entry, similar situation around here for $4. So we're just using a different strike, a different expiration, about $150 scalp right here. So exit around 550. This call was up about $600 from the initial entry, which is an excellent return on a 1 DTE call that essentially went straight up. And for those with larger accounts that like to trade it a little bit safer, this is the 1 DTE, but the 5720 call. It's 1 DTE, so it costs a little bit more. Again, less risk to time decay for $10, $300. As it hit the profit target, it was going for 13, so $300 scalp with the same $1,100 profit made if it was held all the way back up until the high of day. So the purchase around $10, the close around 21 bucks. Nice trade if 0 DTE time decay drives you nuts. I know some days it drives me nuts. Some days I'd rather not trade the 0 DTE. The 1 DTE is the next best place that I like to go to for a day trade. So this is not a trade intended to be swung. We're just using the 1 DTE to make it a little bit easier to hold. I think for most day traders, or at least for the type of traders that are watching YouTube videos, this is probably the call that would have been of the most interest. It seemed to be the good sweet spot. For traders with accounts under $5,000, this might even be a little bit too expensive for you. So maybe something like the 5740 0 DTE might be something which you would look at. The problem with this is time decay is really going to hurt this option, and the scalp is going to look something like this. So the entry probably would have been somewhere around 80 cents or so, with the scalp up to $1.40. But you guys can see the pressure of that afternoon time decay just eating away at this option because it's out the money even though the market went up. So if you're pretty quick with the scalp, then obviously there's a really nice room here for a smaller account. But I would avoid going that far out the money on a 0 DTE. In my experience, if you're going to go that far out, you might as well just go with the 1 DTE. Even if you were to go really far out with the 1 DTE, it's still going to hold its value better. So in this case here, this is the 5750, so even further out the money. The entry at this point is around $2.20 or so. The scalp up here is around $3.20, so about $100 return. And if you're holding one for a runner, this contract went all the way up to 600 bucks. Lastly, we can see that the ADD pretty much was coming down to an area of support. And for an extra trigger, or for those of you that like EMAs, this is where having a momentum chart up is pretty good. As a day trader, even if you're not a scalper, this is our 9 EMA. This is a 3-minute time frame. So as the SPY broke back above the EMA, there is room for an entry here. This can help beginner traders identify a trend change on the break back above. But at this point, obviously, if you're purchasing around here, there isn't much room. As you can see, this is VWAP. So it has to be a different thought process on a day like this, as price snapped back over the 9 EMA and it was already pretty close to your profit target. But I just wanted to point that out for this video. Guys, if you enjoyed this video, let me know down below. Leave a comment. Subscribe to the YouTube channel if you're new here. Let me know if you learned something and like it, and I'll catch you in the next one. Thanks for watching.